Hello guys, in the last class we talked about bullish engulfing, bearish engulfing, tweezer tops, tweezer bottom, inside bar patterns, and uh, I think we talked about some other multiple candlestick patterns. In this class we're going to start with morning star. I said I'm going to start, I will explain morning star, evening star, three white crows, three black crows, bullish and bearish rejection pattern. So the first one we're going to be starting with is morning star candlestick pattern. Now they said the morning star candlestick pattern is a reversal candlestick pattern. Now morning star occurs at the end of a downtrend. It tells you that the trend will soon be changing direction. It includes a hammer or a doji in structure. So now I'm going to, let's go straight to examples, I think, because pictures explain more than just mere talk, right? So now this is how the structure of a morning star is. We have a big bullish, big bearish candle, which is this one. Then we have a doji candle or a hammer in between. Then we have a big bullish candle, bullish candle. So now once you notice these three patterns, these three candles at the end of a downtrend, it's telling you that there is going to be a change in trend. It's giving you a signal to buy. You understand? So now see this, see this is the same thing I explained. Bearish candle, a candle in the middle. It doesn't matter whether it's red or green in color. All that matters is there's a bearish candle, a doji or hammer in the middle, and a bullish candle. Once you notice this is a buy, a morning star. Then for evening star, at the end of an uptrend, when you notice a bullish candle, then the middle a doji or hammer, then it's bearish. A bearish candle is giving you a signal that you should sell the market. So that's just the psychology behind morning and evening star. You understand? Just it goes up for evening star. You notice a bearish candle, then a doji, then a bullish candle, which is telling you that this is a sell, right? Then for morning star candlestick pattern, it goes down, right? You notice a big bullish candle, a doji, then a bearish candle, telling you that a bullish candle, sorry, telling you that the market is going to change direction up onto the upside. So this is just um, a signal. It just tells you that this is what is going to happen next. And I think this is one among the candlestick patterns that involves three candles. You know, in the beginning of the class, we talked about one candlestick patterns like hammer, doji. We talk about hanging man, inverted hammer, shooting star, and all those other candlestick patterns, single candlestick patterns. And I said that it is always better to combine two or more candlestick patterns for better confirmation. Then we went to the two candlestick patterns. Then we talked about bullish engulfing, bearish engulfing, tweezer tops, tweezer bottoms, haramis. We talked about inside bar patterns, right? Combining. So now we have gone to the stage where you can combine three candles. Talked about morning star, talked about evening star, right? So we are going to go to our trading app so that we can see better on the examples to make our explanation on more understandable and more practical. Okay, this is our app, and we are making use of GBP JPY to search for examples. Now let's let's scout for these candlestick patterns. For morning and evening star, it's most of the time it's difficult to notice these patterns because it involves three patterns, three candles, and it's usually difficult to cite them, but they are there. Let's take an example. Um, this is this pattern here is, we have a big bullish candle, a doji, and a big bearish candle. Now, this is a evening star, but it is not valid here because the conditions for a evening star is that the market must have bought for some time, right? Then the pattern appears, then we sell. But in this case, the market went down. So we cannot say this is a valid evening star candlestick pattern. So we ignore it and look for um, a valid one. A valid one, right? Okay, now see this one now. We have a big bullish, we have a big bearish candle, we have a hammer in the middle, we have a hammer, in the middle, then we have a bearish candle. Now this is an example of a morning star pattern. Immediately you show this pattern, the market started buying, right? Now, and first of all, it was a downtrend. After a downtrend, it formed this pattern, telling us that the trend has changed direction, right? See on that one here, we have a big bullish, right? A doji. So this is a doji, right? Then a bearish candle. This is an evening star. It is valid because the market bought for some time, bought up small, formed the pattern and fell, telling us that this is a clear evening star pattern. So let's check for more candlestick patterns, for more morning and evening star patterns. Okay, see one now. See this one here, right? It went up, uptrend, right? Which makes it valid first for an evening star. A bullish candle, then a doji in between it, then a bearish candle. So now the setup is valid. All you just need to do is pick a point above as your stop loss, depending on how much you're willing to lose, and pick a point below as your take profit, depending on how much you want to make and your risk appetite, and you execute your trade. Let's check for one last example of morning or evening star. Then we move to the next topic of interest. Okay. Yes. Like I said, it's usually difficult to cite morning and evening star patterns because of it usually involves three candles, unlike other patterns that involve one single candle or two candles. But this is a three candlestick pattern, so most of the time it's usually difficult. Okay, see this one. See this. We have this one here. We have the bullish candle doji and the bearish candle. So this is an evening star. The market bought for some time, right? Formed a pattern and then sold. So that pattern is valid there. See on that one. This market, it's sold for some time. This one here sold. A bullish candle, a bearish candle. Then this is a hammer. This pattern here, a hammer, and a big bullish candle. And you notice after these three patterns, the market went up. So you notice that these patterns are valid. You just need to check the trend it currently is, check the pattern it has formed. Then when the three pattern has formed, you enter your trade. That's just it. So there's no big deal about morning star or evening star. Like I said, you need to just confirm the trend, then the bearish candle. For morning star, the bearish candle, the doji, or hammer, right? Then the bullish candle. Then for evening star, just need to confirm the bullish candle, the doji or hammer in between them, then the bearish candle. That's just it. There's no big deal about it. The next candle pattern we're going to be considering is um, three white crews, three white soldiers, three white and three black soldiers, or three white crews and three black crews. They're practically the same thing. This one, right? So now let's get straight to the structure or how it is now. Now, this is how it is now. Let's say you're in the market, right? Market was selling. Then you now notice candles, big candles begin to form, like bigger, biggest. They keep increasing in size, right? There's no doji in between them. There's no hammer in between them. It's mostly tweezer tops and moribozu or haramis candlestick pattern. It's telling you that um, if it's in a case where you're buying, it's three white crews. If it's in a case where the market is selling or in the downtrend, it's three black crews. Now, see this example. If you notice here, in this example here, the candles are, um, see this first one, it was big, some was bigger, some was the biggest, and there was no doji in between them, no hammer in between them, no inverted hammer in between them, no hanging man, no shooting star in between them. Now, once you notice this now, it usually signifies in the case of three white soldiers, signifies intense buying pressure. It means that the bulls have taken control of the market. While for three black crews, it indicates that the bears have taken over the market. So it mostly signifies buying pressure. See this case now. The first candle was big, was the biggest. Second one, and the second one was not that big. Third one was not really that big. Doesn't really matter. The main thing is that this is the pattern. The candles are big candles. At the end of a downtrend, you begin to notice these candles form. The first one big candle, or just notice that the three candles that form after or at the end of the downtrend are um, following a sequence, either from the biggest to the smallest or from the smallest to the biggest. It does indicate that the trend or the trend has changed, for either the bulls have taken over the market or the bears. But if you notice something now, let's just do some analysis here. If you notice something in this case now, you will notice that this bearish candle and this bullish candle, this one here, that follows immediately, this is a bullish engulfing. So now if I take this trade based on just these two candlestick pattern, I will not miss out on this one, because for someone that is waiting to make use of the three white crew, three white soldiers pattern, you will have to miss out on some pips, because the market will have to go a long distance before it completes forming these three patterns. You understand? So if I enter based on this bullish engulfing I've seen here, I would have made more pips than someone that's waiting for the three white crews to form. But like I've said before, um, there are so many strategies in trading. It all depends on the one that works for you, right? And which one you prefer using. Some people trade based on three white crews and three white soldiers and three black crews. So like I said, I will teach you everything. You pick out the method that is suitable for you and your personality and your trading style, and make use of it. So see examples here. I've already explained. This is see this one, two, three. This is three black soldiers, three black crews. Sorry, I keep mixing it. Three black crews, right? See another example here. Three black crews. right? Just like that. There's no um, big deal about it. So let's go to our MetaTrader app and look for some examples to make it more practical. You understand? Okay. In this case now, this one, this candle, this candle, this candle is three black rows. There was no doji in between them, or um or hammer or any pattern there. Just three big candles there. So this is three black rows. But you notice this method usually has a disadvantage because before you enter the pattern or the market has already gone more than halfway. You understand? And you might miss out in some pips. See another perfect example of uh, three black rows. See this, see this, see this, right? Perfect example of three black rows. Three black rows. It This is telling you that the bulls are fully in control of the market. In this particular case, if you enter the market after seeing this three pattern, maybe you place a sell, you will still make profits because the market sold for quite a while. So let's check for other examples. Uh, let's check for other examples of three black crows and three white soldiers. Three black crows, three white soldiers. And remember, always take note of the particular trend because remember, three black crows happens after a long uptrend when the market have bought for some time. Then you now notice the three candles that form after the uptrend, which is telling you that there has been a change in trend and the market is now bearish instead of bullish. You understand? The bears are taking control of the market. See another example. See this, see this, see this. Three black crows. Three black crows. Telling you that the bears are fully taking control of the market. So now I've given example of three black crows. Let's look for three white soldiers to make our example better, right? Now I think this is see this, see this, see this. Three white soldiers. Three white soldiers. Three white soldiers telling you that this is an uptrend. The bulls are taking control of this market, right? Now let's check for one last example. Then we go to the next topic of interest. Um, let's check. I think this three white crows. This pattern now would have been three white crows. This. But if you notice, this inverted hammer formed, which invalidates it. So this one does not. It is not valid. It's not valid. Let's check for something else. Let's check for something else. Okay. See a very perfect example here. In this case, this pattern, remember, morning star, one first confirmation, right? Then if you notice this candle, this candle, this candle, three white soldiers, telling you that we are in an uptrend. The bulls are taking control of the market. That is just it about three white crows, three white soldiers, and um, morning and evening star. The next topic we're going to be considering is bearish bullish rejection pattern. Now, before I explain bearish and bullish rejection pattern, I would need to explain support and resistance because it works with the principle of support and resistance. Support and resistance is the next topic after this what they call it bullish and bearish rejection pattern. So In the next class, I'm going to start teaching about support and resistance. Then after explaining support and resistance, I will come back and explain um, these bullish and bearish rejection patterns here to make the explanation better. Um, I hope you understand. See you in the next class.